business income. So firstly, we should know the meaning of business income. Any income that is realized as a result of business activity is called business income. It is a type of earned income and is classified as ordinary income for tax purposes. Business income can be offset with business expenses and business losses. It can either be positive or negative in a given year. Income under this head must follow these conditions. There must be a business or profession. Business or profession is being carried by assessee. Business or profession has been carried out by assessee in assessment year for which income tax is filing. As per section 28, the following income shall be chargeable to income tax under the head Profits and Gains of Business or Profession. The profits and gains of any business or profession which was carried on by the assessee at any time during the previous year. Any compensation or other payment due to or received by any person by whatever name called, managing the whole or substantially the whole of the affairs of an Indian company at or in connection with the termination of his management or the modification of the terms and conditions relating thereto. Any person by whatever name called, managing the whole or substantially the whole of the affairs in India of any other company at or in connection with the termination of his office or the modification of the terms and conditions relating thereto. Any person by whatever name called holding an agency in India for any part of the activities relating to the business of any other person at or in connection with the termination of the agency or the modification of the terms and conditions relating thereto. Any person for or in connection with the vesting in the government or in any corporation owned or controlled by the government under any law for the time being in force of the management of any property or business. Income derived by a trade, professional or similar association from specific services performed for its members. Profits on sale of a license granted under the Imports Control Order 1955 made under the Imports and Exports Control Act 1947, 18 of 1947. The value of any benefit or perquisite, whether convertible into money or not, arising from business or the exercise of a profession. Any interest, salary, bonus, commission, or remuneration by whatever name called, due to or received by a partner of a firm from such firm. Provided that where any interest, salary, bonus, commission, or remuneration by whatever name called, or any part thereof has not been allowed to be deducted under clause B of section 40, the income under this clause shall be adjusted to the extent of the amount not so allowed to be deducted. Any sum received under a key man insurance policy, including the sum allocated by the way of bonus on such policy. Next is computation of business income. The law does not seek to bring into the tax net the profits which cannot reasonably be attributed to operations carried out in India. Even if there is a business connection in India or a permanent establishment exists, only that part of the profits which can be attributed to activities through such business connection or permanent establishment can be the subject matter of tax in India. The net income from such business activities is worked out on the basis of general principles governing the computation of business income. A non-resident is also entitled to deduct out of gross business income that part of the head office expenses which can be attributed to the Indian operations through business connection or permanent establishment. The law lays down the ceiling on the head office expenses that can be allowed as deduction in computing the business income. It is laid down that the deduction of actual amount of head office expenses attributable to the business or profession in India shall not exceed 5% of the adjusted total income, which means the total income before taking account of depreciation, carried forward losses, etc. or deductions under Chapter 6A of the Income Tax Act mentioned in Chapter 5 of this guide. The income of the following persons is not subjected to tax as it is not considered as accruing or arising in India. Income of a non-resident engaged in the business of running a news agency or of publishing newspapers, magazine or journals arising from activities which are confined to the collection of news and views in India for transmission out of India. Income of a non-resident who is also not a citizen of India or of a firm in which no partner is resident or Indian citizen, or of a company in which no shareholder is a resident or Indian citizen if such income arises from operations which are confined to the shooting of any cinematograph. After studying this lesson, you should be able to Section 28, Section 40A, Depreciation, Section 43B. Now let's discuss some important sections for business income, which are Section 40A, Depreciation, Section 43B. Section 40A describes provisions for expenses or payments not deductible in certain circumstances. Notwithstanding anything to the contrary in sections 30 to 38, the following amounts shall not be deducted in computing the income chargeable under the head Profits and Gains of Business or Profession. In the case of any assessee, any interest not being interest on a loan issued for public subscription before the first day of April 1938, royalty, fees for technical services or other sum chargeable under this Act which is payable outside India on which tax has not been paid or deducted, provided that where in respect of such sum tax has been paid or deducted, Chapter 17B in any subsequent year, such sum shall be allowed as a deduction in computing the income of the previous year in which tax has been paid or deducted. Any sum paid on account of any rate or tax levied on the profits or gains of any business or profession are assessed at a proportion of or otherwise on the basis of any such profits or gains, any sum paid on account of wealth tax. Any payment which is chargeable under the head salaries if it is payable outside India and if the tax has not been paid thereon, not deducted therefrom. Any payment to a provident or other fund established for the benefit of employees of the assessee unless the assessee has made effective arrangements to secure that tax shall be deducted at source from any payment made from the fund which are chargeable to tax under the head salaries. Next is depreciation. Depreciation plays a vital role in deciding the taxable profits from business and profession. Here you will see the depreciation rate charts as per Income Tax Act and depreciation rates as per Company Act. New asset acquired and put to use for part of the year at which rate is depreciation allowed. Where an asset is acquired by the assessee during the previous year and put to use for the purpose of business or profession for a period of less than 180 days in that previous year, the depreciation in respect of such asset shall be restricted to 50%. Vehicles are entitled for higher depreciation of 50%. A higher depreciation rate of 50% has been provided on new commercial vehicles which are acquired on or after 1/1/2009 but before 1/10/2009 and is put to use before 1/10/2009 for the purpose of business and profession as the Finance No. 2 Bill 2009, the extension of 6 months was announced. We can see the table and also get the rates of depreciation. Section 43B states certain deductions to be only on actual payment. Notwithstanding anything contained in any other provision of this Act, a deduction otherwise allowable under this Act in respect of any sum payable by the assessee by the way of tax, duty, cess or fee by whatever name called under any law for the time being in force. Any sum payable by the assessee as an employer by the way of contribution to any provident fund or superannuation fund or gratuity fund or any other fund for the welfare of employees. Any sum referred to in Clause 2 of subsection 1 of Section 36. Any sum payable by the assessee as interest on any loan or borrowing from any public financial institution or a state financial corporation or a state industrial investment corporation in accordance with the terms and conditions of the agreement. 692C governing such loan or borrowing. Any sum payable by the assessee as interest on any term loan from a scheduled bank in accordance with the terms and conditions of the agreement governing such loan shall be allowed, irrespective of the previous year in which the liability to pay such sum was incurred by the assessee according to the method of accounting regularly employed by him, only in computing the income referred to in section 28 of that previous year in which sum is actually paid by him, provided that nothing contained in this section shall apply in relation to any sum referred to in Clause A or Clause C or Clause D or Clause E, which is actually paid by the assessee on or before the due date applicable in his case for furnishing the return of income under subsection 1 of section 139 in respect of the previous year in which the liability to pay such sum was incurred as aforesaid, and the evidence of such payment is furnished by the assessee along with such returns. Now let's discuss deductions under sections 30 to 37I. Section 30 is for rent, rates, taxes, repairs and insurance of buildings used for the purpose of the business. Its deductions are: rent of the premises is allowed as deduction. However, notional rent paid by proprietor is not allowed as deduction, but rent paid by him to its partner for using his premises is allowed as deduction. Current repairs, if the assessee bears the cost of repairs, are allowed as deduction. Any sum on account of land revenue, local taxes or municipal taxes subject to section 43B, as per section 43B, deduction shall be allowed only if such sum is actually paid on or before the due date of furnishing or return, and insurance charges against the risk of damage or destruction of building is allowed as deduction. Section 31 is for repairs and insurance of plant, machinery and furniture. Deductions under it are: of current repairs to the plant, machinery and furniture is allowed as deduction. However, capital repairs incurred by the assessee are never allowed as deduction whether plant is leased or is purchased. Instead, the capital repairs incurred shall be deemed to be an asset eligible for depreciation. Premium paid for insurance against the risk of damage or destruction of plant, machinery or furniture is allowed as deduction. Section 32 is of depreciation. Deductions in respect of depreciation are: buildings, machinery, plant or furniture being tangible assets; know-how, patents, copyrights, trademarks, licenses, franchises, or any other business or commercial rights of similar nature being intangible assets acquired on or after the first day of April 1998, owned wholly or partly by the assessee and used for the purpose of the business or profession. The following deductions shall be allowed. Section 36, Part 1, Part I is for insurance of stock. Deductions under it are: the amount of any insurance premium paid in respect of insurance against risk of damage or destruction of stocks or stores used for the purposes of the business is allowed as discount. Insurance premium on the health of employees is allowed as deduction if following conditions are satisfied. A. The premium is paid by check by the employer. B. Premium is paid under the scheme framed in his behalf by the General Insurance Corporation of India and approved by the central government. Bonus or commission is allowed as deduction only where payment is made during the previous year or on or before the due date of furnishing return of income, US 139. Employer's contribution paid towards recognized provident fund or an approved superannuation fund is allowed as deduction subject to section 43B. However, contribution to non-statutory fund or unapproved fund is not allowed at deduction. In case of contribution towards superannuation fund is allowed as deduction, US 37. Any sum paid by the assessee as an employer by the way of contribution towards an approved gratuity fund created by him for the exclusive benefit of his employees under an irrevocable trust is allowed as deduction subject to Section 43B. Where a deduction has been allowed in respect of a bad debt or part of debt, then if the amount subsequently recovered on any such debt or part is greater than the difference between the debt or part of debt and the amount so allowed, the excess shall be deemed to be profits and gains of business or profession and accordingly chargeable to income tax as the income of the previous year in which it is recovered, whether the business or profession in respect of which the deduction has been allowed is in existence in that year or not. Deduction in respect of revenue expenditure for promoting family planning amongst its employees is allowed as deduction, and in case of capital expenditure, 1/5 of expenditure incurred is allowed as deduction in 5 equal installments. Section 37 is of general deduction. This is a residuary section. Hence, this section covers only those items of business expenditure which are not covered under Section 30 to 36. The deductions US 37 is allowed if expenditure satisfies all the 3 conditions mentioned below. Expenditure is incurred wholly and exclusively for the purpose of the business. The word wholly refers to the quantum of expenditure and the word exclusively refers to the motive, object or purpose of the expenditure. Such expenditure is not in the nature of personal expenditure. Such expenditure is not of capital in nature, that is, expenses should be of revenue in nature. Revenue expenditure, on the other hand, is operational in its perspective and solely intended for the furtherance of the enterprise. Following expenditures were held to be incurred wholly and exclusively for the purpose of the business: official or administrative expenses, audit or legal fees, advertising expenses, traveling or conveyance expenses, entertainment expenses, interest paid for overdraft facility, remuneration payable to employees or other expenses incurred for the benefit of employees, Diwali expenses, interest paid on payment of dividend is allowed as deduction. Following expenditure were held to be personal expenses: drawing by the owner for personal use, interest on own capital in case of proprietorship concern, remuneration paid to owner of the business in case of proprietary concern, donation US 80G or any other similar donations not. Now before we go further, firstly we should discuss deductions under Section 35. For this, we can see the table in the slide and the deductions allowed as per different subsections of Section 35. Now let's discuss Section 44AB stating compulsory audit of accounts. Every person have to necessarily audit his account if carrying on business shall, if his total sales, turnover 711 or gross receipts as the case may be in business exceed or exceeds 40 lakh rupees in any previous year. Carrying on profession shall, if his gross receipts in profession exceed 10 lakh rupees in any previous year. Carrying on the business shall, if the profits and gains from the business are deemed to be profits and gains of such person under Section 44 AD or Section 44 AE or Section 44 AF as the case may be, and he has claimed his income to be lower than the profits or gains so deemed to be the profits and gains of his business as the case may be in any previous year, get his accounts of such previous year audited by an accountant before the specified date and furnished by that date the report of such audit in the prescribed form, duly signed and verified by such accountant and setting forth such particulars as may be prescribed 714. After this is section 44AF, stating special provision for computing profits and gains of retail business. Any deduction allowable under the provisions of section 30 to 38 shall, for the purposes of subsection 1, be deemed to have been already given full effect to, and no further deduction under those sections shall be allowed. The written down value of any asset used for the purpose of the business referred to in subsection 1 shall be deemed to have been calculated as if the assessee had claimed and had been actually allowed the deduction in respect of the depreciation for each of the relevant assessment years. The provisions of section 44AA and section 44AB shall not apply in so far as they relate to the business referred to in subsection 1, and in computing the monetary limits under those sections, the total turnover, or as the case may be the income from the said business, shall be excluded. Notwithstanding anything contained in the foregoing provisions of this section, an assessee may claim lower profits and gains than the profits and gains specified in subsection 1 if he keeps and maintains such books of account and other documents as required under subsection 2 of section 44AA, and gets his accounts audited and furnishes a report of such audit as required under section 44AB. After this is a section 44B stating special provisions for computing profits and gains of shipping business in the case of non-residents. In the case of an assessee who is a non-resident and is engaged in the business of operation of ships, a sum equal to 7.5% of the aggregate of the following: the amounts paid or payable whether in or out of India to the assessee on the account of carriage of passengers, livestock, mail or goods shipped at any port in India. Any amount received or deemed to be received in India on account of carriage of passengers, livestock, mail or goods shipped at any port outside India shall be deemed to be profits of such business. The carriage amount will also include amount paid or payable by the way of demurrage charge or any other amount of. Now let's discuss valuation of stock. There are no provisions in the Income Tax Act regarding the valuations of stock in hand in a business. Hence, it is valued according to the general principles of accounting. Ordinarily, the valuation of stock is done on the basis of cost or market price, whichever is lower. The valuation of purchase and sale of goods and inventory for the purposes of determining the income chargeable under the head Profits and Gains of Business or Profession shall be, in accordance with the method of accounting regularly employed by the assessee, further adjusted to include the amount of any tax, duty, cess or fee actually paid or incurred by the assessee to bring the goods to the place of location and condition as on the date of valuation. Now let's discuss method of accounting. Mercantile system of accounting is compulsory for business, whereas cash system is permitted for professionals. Accrual principle is followed in mercantile system, which refers to the assumption that revenues and costs are accrued, that is, recognized as they are earned or incurred and recorded in the financial statements of the periods to which they relate. The following accounting standards are notified to be followed by all assessees following mercantile system of accounting, namely, Accounting Standard 1 relating to disclosure of accounting policies, Accounting Standard 2 relating to disclosure of prior period and extraordinary items and changes in accounting policies. Now let us check if we have understood the various concepts discussed in this lesson clearly. Any income that is realized as a result of business activity is called business income. Right or wrong? Right. As per section 29, income carried on by the assessee at any time during the previous year shall be chargeable to income tax under the head Profits and Gains of Business or Profession. Right or wrong? Wrong. As per the general principles of accounting, the valuation of stock is done on the basis of cost price. Right or wrong? Right. Now let's revise what we have studied till now. According to Income Tax Act 1961, income under this head is defined as the income earned by assessee as a profit or gain in his business or profession. Income under this head must follow these conditions. There must be a business or profession. Business or profession is being carried by assessee. Business or profession have been carried out by assessee in assessment year for which income tax is filling. Taxation regarding business income is covered in Section 28 and 29 of Income Tax Act 1961. Apart from these, there are certain important sections for business income that are covered under Section 40A and Section 43B. Profit is the surplus by which the receipts from the trade or business exceed the expenditure necessary for the purpose of earning those receipts. Business is an activity with a commercial nature.